Next loser, how about Cramer all-time fave, Nvidia, down 18 points and at one point down $40, in large part because of worries about competition, specifically from Intel, which put out a release today talking about a new chip, the Gaudi 3, they claim is vastly superior to Nvidia's H100 super chips. When I read the release first, I gulped until I read the claims that Intel made about its processor, the Gaudi 2, back in 2022, which also slagged Nvidia's chip as a poor man's Intel. And the Gaudi 2 didn't make any waves at all. I know that if I weren't pretty well versed with Nvidia, I might have been tempted to sell back then in 2022, as the Gaudi announcement made it sound like Intel would own the market that had been previously dominated by Nvidia, because their chip was so much better. The Intel release at the time said the Gaudi 2 had, quote, twice the training throughput of the Nvidia A100, end quote. But if you sold Nvidia that day, how'd you do? You would have gotten $175 for your stock. 175. Well, now it's at 853. Glad I helped. Now, it's entirely possible the Gaudi 3 is superior than the NVIDIA H100 in some categories, but the H100 is not what they'll be competing against. By that time that Intel's super chip goes out, NVIDIA will be shipping the much faster Blackwell, which was unveiled at their recent GTC conference. Plus, what made me want to stick with NVIDIA back then? Simple. It's not just the chip, it's the software, it's the ecosystem, it's the platform, it's the leadership. Consider it like this. Let's say you have a running back that could run a 4.2 in the NFL Combine, but in the real game, it might not cut it at all. On the other hand, a fully loaded NVIDIA running back will have developers writing code for it, a host of already hooked customers, including the mega caps, and the service that's nothing short of unbelievable. You need the blocking and tackling NVIDIA has, and Intel does not. That's why I think the Gaudi 3 will be as lightly used as the Gaudi 2. And I'd rather buy NVIDIA than sell it here, even as I predicted that the stock would get crushed with a lot of selling in the wake of GTC. The selling's been pronounced, as the new stock's now sunk more than 100 points. That stock's now sunk more than 100 points in just over 2 weeks. And you know what? If we get a red-hot CPI tomorrow, I think we'll see today's lows again. So I'm not saying buy. NVIDIA's stock may have also suffered from the unveiling of a mildly competitive Google chip, too. But if you recall my interview with CEO Jensen Huang, he said he welcomed development and he would even help his customers develop them, and that includes Google. So I'm not shaken or stirred. But I understand. NVIDIA can still fall. But, I say own it, don't trade it.
Let's bring in Matt Bryson, Senior Vice President of Research at Wedbush Securities. Matt, welcome. Good to have you with us. Is this chip from Intel a game changer either for Intel or for the sector?
I don't think so. This is the third iteration of this chip. And when you think about where NVIDIA is getting all of its business, it's not through, for the most part, the OEMs that were mentioned by Intel when they talked about where the chip was going to get sold. Rather, you've had NVIDIA tell us that 50% of their businesses, the cloud service providers, they've mentioned before that social media is a major end market. All of those buyers are buying through ODMs for the most part. I would suggest that 80% plus of NVIDIA's business is those large type customers that Intel doesn't have yet.
Right. This feels like it's more about Intel than it is NVIDIA. And Matt, and I just wonder if you think that Pat Gelsinger is trying to bite off too much. He's trying to create a foundry business essentially from scratch, and he's also trying to keep up with some of the other big players in AI at this point. Can you do it all?
I think it's really hard to do it all. Now, having said that, for Intel, I think the most important piece to get right is the fab piece. If you can get the fab piece right, you can get your costs down. You can compete in your core markets, which are PCs and standard compute for servers. And then I think you have an opportunity to go after AI. And Intel does have a larger architectural shift ahead. They have a product called Falcon Shores coming out in 2025. And I think for Intel, if they're going to make it in AI, it's probably that product that makes it or breaks it for them.
Nvidia has been the darling of the tech world lately. Whether the talk is about AI, chips, or graphic cards, this company takes the lead. Thanks to the recent AI boom, Nvidia has been dominating the AI and tech sector. But there are many who believe that this dominance may not be for long, especially with vast competitors snapping at Nvidia's heel.
Intel unveiling its new AI chip set to compete against Nvidia and AMD. Shares of the chip maker higher today, but falling 13% so far this month. Joining us now, More Insights and Strategy CEO Patrick Moorhead. Patrick, I had to start right here with you. There's a lot of bad news priced into Intel right now. Is the market fully appreciating the fact that it has a chip that's coming to market that, at least based on what NVIDIA currently has in the marketplace, sounds like it's highly competitive?
Yeah, so overall, I don't think Intel is getting as much credit as they deserve, but primarily of what their foundry business will be bringing. Now, what they announced today, which was a chip called Gaudi 3, does for certain workloads outperform NVIDIA's current product line. It will take certain percentage, probably single-digit market share in this, but I don't think that this is going to be a sea change out of the gate. It gets much more interesting for Intel when they bring an AI GPU to market in 2025, and then what they can do is leverage GPU, accelerator, and CPUs that do AI processing across the board in the data center. That's when it gets really interesting.
Okay. How about the software and inferencing piece of this? We know NVIDIA has such a formidable lead on everybody where this is concerned. It continues to drive more and more revenue and more stickiness in terms of its customer base for that company. But Intel did say that with the new Gaudi 3 chips, that it not only has some customers already in place, but it is looking to work with folks like Google, like Qualcomm, like ARM to build open software that isn't proprietary.
Yeah, Intel actually created an organization that's part of an open organization inside of the Linux Foundation for many of the companies you just listed to work together on a common standard. So independent software vendors and enterprises don't have to start from scratch, whether they're using ARM, whether they're using Intel, and a lot of other manufacturers. And this will reduce the friction it would take to move off of NVIDIA for certain. I mean, I've never seen the groundswell of effort in the industry to come up with some sort of an abstraction layer that allows you, like we have with processors, to bring in any type of software to run regardless of what the hardware is.
I do want to shift gears to Google, but before I do, NVIDIA was down another 2% today. It's been pretty weak in the last, call it week and a half of trading in general. Is this profit taking, or is this the fact that you do have more prospective competitors coming to market, including, by the way, as of today, Google?
Yeah, I think this is profit taking at its best. I mean, the valuation is in the stratosphere here, and I've seen nothing that would convince me that there's some sort of a sea change that NVIDIA is going to lose at this point. I need to see a little bit more evidence. I need to see more customers from the AMDs and the Intels out there.
NVIDIA has been leading the AI chips market thanks to its role in the development of OpenAI's ChatGPT, which kicked off an insane generative AI race when it was released 2 years ago. Since NVIDIA's chips were used in ChatGPT, all tech companies wanted in, and NVIDIA's chips became so popular that demand always exceeded supply. To counter NVIDIA's dominance and to reduce their reliance on the company, Intel and Google started working on products that can compete with what NVIDIA offers. But will this be easy? What competitive advantages does NVIDIA enjoy? And how can the chipmaker protect its crown from its ever-vigilant competitors? Stay tuned because we're about to shed some light on this interesting topic. But before we do that, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Bank of America securities analyst Vivek Arya joins us now, maintains a buy rating on NVIDIA, price target of $1,100. So Vivek, do you see this as just the stocks needed to cool down?
Yeah, I think, Sarah, this is the 9th or 10th time in the last 2 years we have seen Nvidia stock have a 10% or so correction. And every time it has done that, it has inevitably been a good opportunity to relook at the stock. Because fundamentally what's happening is that we are going to have at least a 4+ year build out of the AI deployment infrastructure across cloud service providers, across enterprises. We are still in the second year of those 4 years. So anyone who is trying to call this as a peak, in my view, is being too premature. So the size of the opportunity is growing. It can be 250 to 500 billion annually. We are still less than 100 billion of that. So size of the opportunity is growing. Second, their pipeline is extremely strong. Today, a lot of the AI infrastructure has been built on a product that they conceived during the COVID time. Generative AI was not even a thing at that time. It's really the new product Blackwell that is coming out that we think is really custom designed for generative AI, and that will just start shipping in another quarter. So larger opportunity size, a much stronger pipeline. And then the third and most important thing is valuation. We think NVIDIA is the cheapest large cap growth stock in our coverage. It's selling for under 30 times for an earnings growth rate, which is 40% plus, right? The S&P 500 is trading at 2 times price to earnings growth ratio. NVIDIA is less than 1 time. So we think increasing size of opportunity, better pipeline, and a very compelling valuation. And volatility is just, part of the game here.
Wonder if investors are worried at all about competition. Vivek, we got that news yesterday from Google announcing its own sort of ARM-designed CPU chip. Is that a threat here to names like NVIDIA?
Yeah, I think competition is going to be there since the AI market started. We have seen custom chips account for about 10 to 15%. NVIDIA has consistently managed to keep 75 to 80%, and we have seen nothing that changes that view. Google has been designing their internal chips, actually designing in collaboration with Broadcom since 2017. And since 2017 to now, NVIDIA's data center business has probably grown 20 to 30 times. So Google designing their own chips, I don't think is anything extraordinary. In fact, the CPU part that they are designing, CPU is something that NVIDIA doesn't even sell to them. So I don't think that CPU announcement really should have had any implication on NVIDIA. The other interesting thing that I think sometimes gets forgotten is that if you look at who is ahead in terms of monetizing generative AI and large language models, it's companies such as OpenAI, Microsoft, Meta. And if you look at who has been the largest adopter of NVIDIA chips rather than custom chips, it's OpenAI, Microsoft, and Meta, versus others who have relied more on internal chips. So is that just a coincidence, or is that really a correlation between the faster adoption of NVIDIA products and the success that these customers are seeing in the monetization of their generative AI infrastructure?
Among the Magnificent 7 stocks, NVIDIA's shares surged the most recently, spiking 82.5% in the first 3 months of 2024. This company, being the worldwide leader in GPUs, saw its stock skyrocket by 245% last year. And in the first quarter of 2024, it became almost every analyst's favorite stock. A Wall Street darling, you may call it. This surge was facilitated by an increase in the requirement for NVIDIA's chips, fueled by the unquenchable demand for AI models among tech companies. Of late, NVIDIA's data center business has done well, with its H100 graphic cards becoming the most sought-after commodity among AI developers in Silicon Valley. Among industry leaders fighting for NVIDIA's tech is Tesla's CEO Elon Musk. Elon disclosed in a recent interview that Grok, the AI chatbot from his xAI startup, requires tens of thousands of GPUs to train. He said that training of Grok's version 2 model required as many as 20,000 NVIDIA H100 GPUs, and he anticipates that future iterations will demand even greater resources, with the Grok 3 model needing around 100,000 NVIDIA H100 chips to train. Similarly, tech giants like Google, Microsoft, Amazon, and Meta are NVIDIA's biggest customers, driving roughly 40% of its revenue. These achievements go a long way to show how solid NVIDIA's business is, so to have companies like Intel and Google vie for the same spot, they must have something interesting up their sleeves, and we're going to unravel it. Hello everyone, and welcome back to Investocracy. Intel recently unveiled their Gaudi 3 chip, which it claims is both faster and more energy efficient than NVIDIA's current H100 at a fraction of the cost. Also, Google jumped into the ring too, announcing its new Action chip. Not only that, but Meta just revealed its next-generation MTIA artificial intelligence chip, and all of these moves were seen by analysts as these companies' ways of telling NVIDIA that they don't want to rely on it so heavily anymore. But let's not be so quick to judge, because NVIDIA won't be defeated so easily. While many would say that Nvidia's current valuation looks stretched, it has more upside left due to the spending frenzy on AI. Jim Cramer even said that the new chips being released by competitors won't have a great impact on Nvidia. For one, the chipmaker's expected earnings growth rate for the current year is 84%, and the estimated revenue growth rate is about 72.6%.
Well, Nvidia is one of the outliers in today's session, bucking the broader market selling action. And you can see gains of just about 1%. And it hasn't been an easy road, though, for this AI darling in the recent weeks, because the stock actually sold off after it hit an all-time high of $950. That was back on March 25th. Shares since then have fallen about 10%. So here with more on what the road ahead could look like, we want to bring in Gil Loria. He is D.A. Davidson Managing Director. Gil, it's great to talk to you. So we don't want to make too much of a 10% drop, especially for Nvidia, given the fact that we have seen this massive run up over the last year, a massive run up even since the start of this year. But when you take a look at some of the technical levels and the pricing action that we've seen in Nvidia, what does that signal to you?
That Nvidia is caught between two very strong forces. This year is going to be a spectacular year for Nvidia. They only have 5 large customers that represent more than 2/3 of their revenue, and all those customers are telling us in the street that they're going to buy a lot more GPUs this year. So there's a lot of comfort that Nvidia can exceed its expectations this year. That's one big force. The other big force is that there are many technology trends and market trends that are indicating that this won't last for very long, that by 2026, NVIDIA's revenue may not be higher, it may actually be lower than it is this year. So somewhere between those two forces, the stock is caught, and that's why it's become so volatile.
Why do we think 2026 is the end for NVIDIA?
Not the end, but a normal cyclical downturn. NVIDIA has massive share in this market that's absolutely exploded, but its customers are even bigger companies. So Microsoft, for instance, represents 19% of NVIDIA's revenue last year, and their spend on GPUs was almost 40% of their CapEx, of Microsoft's CapEx. That means their CapEx went from 12% of revenue to 17% of revenue. If that was to sustain or grow, which is what's implied in NVIDIA's estimates, Microsoft would lose 5 points of margins over the next few years. That's highly unlikely. It's unlikely that this level of investment from these large customers will continue, especially as they develop replacements for NVIDIA's chips. Yeah. Microsoft, Amazon, Google are developing their own chips to replace NVIDIA.
Yeah, and Gil, I want to talk to you a little bit more about that, because clearly NVIDIA is seeing more and more competition, and it seems to be, and it is coming from even some of its own customers. So what pressure, or how much pressure do you see that potentially placing on margins, or even just restricting some of their pricing action then in the years to come?
Well, that's the thing. Not much this year. This year, it's still all going to be NVIDIA. For all these customers, they're buying as many GPUs as they can put their hands on. But within a year or two, they're going to have production at a level that they can support their own demand. And importantly, they can reduce costs very significantly by using custom chips that are only there to do training and inferencing for AI. Those are far less expensive chips than GPUs. GPUs are extraordinarily expensive because of how versatile and competent they are. It's like driving to the grocery store in a gold-plated Ferrari. You don't need that. A Tesla Model Y will do the trick, and that's what Microsoft, Amazon, and Google are developing in-house.
NVIDIA's first mover advantage is why its shares have outperformed the semiconductor industry year to date, and why the stock currently has a strong buy rating from analysts. Also, the company's impressive fiscal Q4 earnings results boosted investors' confidence in the company. NVIDIA is expected to report Q1 earnings in May of this year, and its outlook for the quarter is also very impressive, forecasting a revenue of $24 billion, above Wall Street analysts' own forecast of $22 billion. The chipmaker doesn't have to worry too much about the competition, because aside from its leading GPUs, NVIDIA is special because it's dedicated to building custom architectures. The tech titan does not just join parts together, but instead it designs the whole chip from scratch, optimizing it for pure graphical grunt. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video. Other companies can make chips, but not all of them have NVIDIA's software advantage, so by providing both the hardware and the software, NVIDIA is basically locking developers in its ecosystem. This tight integration between hardware and software is something competitors are still trying to catch up on, especially because many tech companies have already built their systems on NVIDIA's products, meaning that they'd only switch to something else if it's way better than what NVIDIA offers or way cheaper, and it could take a while before something like this even exists. Also, big tech companies like Amazon and Microsoft are already building their own chips, but NVIDIA still dominates the market and still has both of them as customers. It's the same with Google, which is coming out with its own chip, but also announced that it'll be using NVIDIA's Blackwell platform for Google Cloud next year. As for Intel, the company can say that its new AI accelerator is better than NVIDIA's H100, but NVIDIA is getting ready to release the Blackwell products in the upcoming quarters, which will be a lot better than the H100. Sure, the competition is there when it comes to the price points, but NVIDIA is still one step ahead when it comes to the actual technology. Remember, a few months ago at Stanford, NVIDIA's CEO, Jensen Huang, said that even if NVIDIA's competitors started giving away their chips for free, NVIDIA would still be the better solution for the customers. This doesn't mean that Intel's new chip won't add anything to the company, as the market is still big and continues to expand, so if you also own shares in Intel, you should be pretty happy about this development.
Okay, but having said that, in terms of the Ferrari versus the Tesla there, I wonder to what extent new car makers are going to come in and disrupt what we see going on with the NVIDIAs of the world. We already have Intel announcing new chips, Google announcing new chips. To what extent are those competitors prepared to really take some market share here?
So the large hyperscalers already have products. Those will ramp up pretty quickly over the next few years. In terms of upstarts like Grok or others, that'll take longer. That'll take just because chips are very hard to make. It takes a really long time to master that process. But there's a wave of new chips that were built specifically and exclusively around how generative AI works. Those are going to be far better and less expensive. And I'd expect those to ramp up into more the 3 to 5 year time frame.
So good, when we talk about the fact that at least when you're taking a look at the longer term timeline, we could see a little bit more pressure from these competitors when it comes to NVIDIA's business. Who do you think is best positioned outside of some of the customers that we already talked about, turn to competitors maybe here in the future? Who do you think is best positioned in order to really capitalize on the AI spending and momentum within the space?
So I do think it is the hyperscalers, because they're the ones that are actually using these chips to provide a service, and that's not going to stop. There's going to be a continued ramp of activity, training and inferencing on generative AI. So it is, first and foremost, Microsoft, which is getting a lot of credit, justifiably so, but also Amazon. Let's not forget, AWS is bigger than Microsoft Azure, and they're just getting warmed up in terms of their ability to provide generative AI services to their customers, which they have more of. And Amazon, by the way, to tie this back to the chip conversation, when they just made a big investment in Anthropic, $2.75 billion, part of the deal was that Anthropic would run on Amazon chips. So Amazon is setting itself up to be vertically integrated here and provide these generative AI services at a much more competitive price. They're getting some credit, but not nearly enough.
Gil, to what extent should investors be worried about valuations for some of the names you just mentioned?
So Microsoft is trading closer to the top of its valuation range, which it deserves to, because it's a much better company than it has been for the last 25 years. Amazon is trading a little bit above average, but still not at the high end of its multiple range. And so there's a little bit more opportunity there. And to circle back to NVIDIA, it really hinges on what you take for 2026 estimates.
Both Intel and Google have the resources to make serious headway. But for now, Nvidia has a strong lead thanks to its impressive GPUs, optimized software, and a head start in the high-performance graphics market. Some experts believe these new chips from Intel and Google might not dethrone Nvidia just yet. Probably they might be aimed at a slightly different market, or they might need some tweaking before they truly challenge Nvidia's dominance. But the truth is that the tech world never sleeps, and Nvidia obviously can't rest on its laurels forever. So, while it's the leader now, we must admit that the tech game is still on, and there are still so many possibilities. Still, let's look at the positive side of things. Good competition is helpful for everyone. It pushes all these companies to innovate and create even better products. Consequently, businesses and tech enthusiasts get the benefit of faster AI, smoother graphics, and hopefully even more affordable options. And that's a win-win. For sure, the next few years are going to be a wild ride in the world of chip technology, and we'll definitely be watching from front row seats. But what do you think? Will Intel or Google be dethroning Nvidia anytime soon? Let us know your thoughts in the comments section. If you would like to know what Nvidia has been up to these past few days, then go ahead and click on the next video on your screen.